Flows into equity mutual funds saw a sharp decline in the month of April. Data provided by Association of Mutual Funds in India shows that gross inflows into active equity mutual fund schemes dipped 34% month-on-month to 25,400 crore rupees in April. Consequently, the net inflows dropped around 68% month-on-month to 6,480 crore rupees, their lowest level since November last year. Analysts attribute the steep decline to a number of factors, including strong seasonal inflows in March and few new fund offers.
There were no new NFOs in April compared to the previous month, especially in the dividend yield category and the sectoral category. These categories experienced a significant decrease on month basis because there were no new NFOs here and there was substantial NFO collection in the month of March. Additionally, flows in the equity linked saving funds, which is the ELSS, also typically have much higher flows in March as compared to April. This is more seasonal than structural. Typically, you see a lot of people, doing their ELSSs in the last month of the year. Furthermore, there were also a few closed-ended funds which matured in the month of April, which again led to lower net inflows. So that I think these are main reasons why you saw a big month-on-month dip.
Segment-wise, large-cap mutual funds clocked inflows worth just about 53 crore rupees in April, down sharply from inflows of 911 crore rupees in March. On the contrary, small-cap MFs attracted a net inflow of 2,182 crore rupees and mid-cap MFs saw 1,791 crore rupees worth of investments. That said, total asset under management for the MF industry rose 5.6% month-on-month to 41.6 trillion rupees in April. Going ahead, analysts expect flows into index funds or large-cap mutual funds to outpace other offerings.
Until 2022 or even till end of April, the YTD FII flows are negative. 2022, it showed had a very high FPI outflows. So when I look at the foreign portfolio investors, their portfolio, that would predominantly be comprised of large caps. So more than what the underlying performance of those companies, it was more of a flow thing, where the foreign portfolio investors had a higher share of investment in those large cap funds, and therefore there was selling pressure, and hence the returns were muted. So that is one factor which you would see some bit of revival, and therefore you would see the performance of large cap funds coming back.
Thomas says large cap companies have better earnings visibility, stable balance sheets, and better risk reward, keeping their funds better placed than others. Meanwhile, Sahil Kapoor of 361 Wealth expects performance trend to remain mixed across various asset classes.
So I see short-term funds, money market funds continue getting flows. Long-term debt and medium-term debt funds will struggle post the new tax changes. So I think target maturity funds will not see the flows they were used to seeing earlier. A lot of the debt money might move into hybrid funds. So I think hybrid funds will see good flows going forwards. In terms of large cap funds, I think they will continue to see outflows at the expense of an index funds. So I think passive investing will definitely be more dominant in the large cap space. But as mid and small cap funds will continue getting money.
In nutshell, inflows into mutual funds could slowly gather pace as stability returns to markets. Analysts expect large cap funds, hybrid funds, and shorter duration debt funds to be among the pockets which may see higher flows. Today, on May 17th, last leg of corporate earnings and global sentiment will dominate the market trend.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.